Hello, Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It is Friday, the 17th, and we've had quite a hectic week in the markets with big swings both in the indices and also in the precious metals and gold. So let's start off with the indices. How are we closing for the week? First of all, we had a very positive day yesterday. A bullish engulfing line probably means we put in a low right now in the S&P 500. The key there to look for next week is going to be a situation if we go below the lows we've seen this week, and that would be quite simply if we go below this low here, which is 2050. That would mean you would move on to a sidelines position in this index. Right now, I would expect we'll just see some backing and filling. We do have resistance coming at the 50 level, remember that, and we are trading below that right now. So I think that's going to be more the story next week, is just more backing and filling. We do have the Brexit coming in on the 23rd. That's something that a lot of traders will be keying in on, and there's a nervousness there, no question about it. So let's see how that plays out. But let's see how we close for the week in the S&P 500. So just go to a weekly chart, quite simple to do with Market Club right here. Click once, and you can see right now we are down for the week, and unless we see a big rally today, we are down about 0.86% for the week. Not a big deal, but certainly it is down for the week. And that's the third week in a row we've been down, so it's something to look at. So let's see how that plays out and go to our next market. Here's the Dow, also down for the week. This Dow is down 0.74, not so bad, but the big thing in the Dow is this market has moved to the sidelines. You should be on the sidelines. If you put our trade triangles in, you can see they're definitely mixed with the daily and the weekly red and the monthly green. So you've got that mixed signal. You want to be on the sidelines right now in the Dow. This is the NASDAQ again. The NASDAQ was perhaps the biggest loser for the week, down 0.98%, almost 1%. But again, the key level there this week to watch, in our opinion, is going to be 4,000. It's going to be this low right here, 4,778. If we go below that level, you will turn this trade triangle red, indicating a sidelines position. And that's the important thing to remember. We are above the 50 line on the weekly, indicating the trend is still up. And to be fair, our trade triangles, I'll take the screen, clear the screen off for a second. Our trade triangles are still positive, both the weekly and the monthly. So that's something to pay attention to. This is gold, make no mistake about it. We talked about this on yesterday about the 8 days we've had in a row. Very, very unusual. You can go back and you won't see that many days in a row where you don't have a correction. And I think that's the important thing. That was a standout point I was making yesterday. We still are long this market from 1277, but we want to move our stops up to the lows here, yesterday's lows. If we go actually make that the lows we see here, and that's 1276. So if we go below 1276, we'll be exiting our position. Let me put the number in. So it's 1276. We'll be exiting our position. And as you can see, we're long from 1277. So we'll be taking about $1.50, risk about $150 a contract. Not too bad. But again, let's see how this market plays out. The key level, as we've said all along, is this $1,300 level. We need to see a close over 1,300, not once but twice or even 3 times before you can say that's broken to the upside. That was the reversal we saw yesterday. As you can see, gold is actually up 1.17% for the week, so it's the biggest winner in the markets we've been looking at, both on the upside and the downside. And let's go to our next market. Well, the biggest loser has to be crude oil, down 3.77% for the week. And you can see it has turned our weekly trade triangle negative, indicating you should be short this market from 47.40, currently trading at 47.22. And you can see the momentum has turned back down here again. We exited our position at 49.44. That was our long position. And let's take a look at just a daily chart. Go click here once, go to daily, and you can see this is where we exit our long position, pretty close to the highs. Pretty happy about that. Would like to have gotten out higher, but Our signals did not dictate that, and the key thing is to follow the signals. So here's our last signal, 47.40, and we're currently at 47.21. So some nice little bit of profit in there, not so much, but we'll see how that plays out. But the key thing is we've given you the rules to trade futures, crude oil, and gold, and we give you the signals every day. It's never had a losing year since 2007. So you may want to follow that. This is Adam Hewison from Market Club. Thanks for watching. Be sure to leave a comment. We've got some great comments on the blog right now. I think you really enjoy reading them. And thank you for all of those who are contributing to the blog. We really appreciate it. And share your thoughts, your ideas, and make a comment. It doesn't hurt. It can help a fellow trader. I'm Adam Hewison from Market Club. Have a great weekend, everyone.